I was willing, in order to become an equity analyst at Janus and Associates, I was willing to buy into ideas that nobody wanted. Even if we go through a correction, and I expect one, we must almost always expect corrections. I just have to keep my eye on the prize. I think it's a good thing for the ecosystem that that understanding is look for the leverage. That's where your weak link is.
Need motivation?
Watch a Top 10 with We Believe Nation.
Top 10, I got a top 10. Got my motivation high for my top 10. Gotta learn from the wise women and men. All my life, like 9 to 9. For my top 10, top 10, 9 to 9. This one's for my top 10.
Hey, it's Evan Carmichael, and I make these videos because you are probably the most ambitious person in your circle, but you know you're capable of more. And you get that push by surrounding yourself with the best. So today, let's learn from one of the best, Cathie Wood, and my take on her top 10 rules to success. Enjoy. Okay, let's kick it off with rule number 1. Build a track record.
Asset management and finance generally is a great place for women, especially if a woman or anyone, it's a man or a woman, can develop a track record. No one can take my track record from me, for better or worse. You know, some years have not been so great, but no one can take it away from me. And if you build one over a long enough period of time, and are successful, it's usually a ticket to more success. So I always say, try and figure out a way to measure your success in a way that no one can take it away from you. And that does not mean not being a team player. Being a part of a team that develops a great track record is really important.
Rule number 2, have a perspective.
What do you think has been the biggest determinant or the biggest contributor to your success?
Oh, well, I've had incredible mentors. I don't think you can do it without mentors. Art Laffer, Sig Sigalis, Bob Kiter, Lulu Wong, Tanya Modik. I think beyond that, though, because of how I started in the industry, I started with economics, so big picture, needed perspective. And I was willing, in order to become an equity analyst at Janus and Associates, I was willing to buy into ideas that nobody wanted. I think that's a big part of success generally. So when I started following equities, Sig Sigalis, bless his heart, gave me the opportunity. I wanted to grow in the business. And he said, but I'm not going to take any stocks away from our seasoned analysts. You're going to have to find your own. So I was like a little dog under the table, looking around for scraps. And I really mean that. And so Reuters and Telerate and Vodafone, nobody wanted those stocks. They certainly didn't want the foreign ones at that time. The US was where the action was. And database publishing, Reuters, Telerate, database publishing. Tech analysts didn't want it because it wasn't pure database. Publishing analysts didn't want it because it wasn't pure publishing. And I'm saying, I'll take that. And of course, what happens? That was the precursor to the internet. A very big idea. So I learned very early when analysts and portfolio managers, strategists dismiss out of hand something that seems to have a kernel of excitement associated with it, go investigate that.
Rule number 3, invest in disruptive innovation.
We believe that there are 5 innovation platforms evolving at the same time. This has never happened in history. You have to go back to the late 1800s to see 3 innovation platforms evolving at the same time. Back then, electricity, telephone, and the internal combustion engine. For the 50 years through 1929, because of those innovation platforms, we experienced a booming economy and very low inflation. We see that happening with these 5 platforms, which are all ready, we believe, for prime time. The 5 innovation platforms upon which we base all of our research are DNA sequencing, robotics, energy storage, artificial intelligence, and blockchain technology. These platforms cut across sectors, they cut across geographies, they cut across markets. And importantly, they are converging with each other to spawn new innovation. A really good example of that is autonomous taxi networks. What are autonomous taxi networks or autonomous vehicles? They are robots. Autonomous vehicles are robots. They will be electric, so they'll be run by batteries, and transportation will be moving onto the grid. And they are powered by artificial intelligence. So those are 3 platforms converging. Now just think about traditional research departments. Who's going to follow those stocks? These are platforms which cut across sectors and geographies. Only with a new kind of research effort do we believe the capital markets will fully be able to exploit these transformational opportunities. So we have an open research architecture. We are sharing our research throughout the world, especially on social media. We are living in the communities we're researching.
Rule number 4, focus on the prize.
It's okay to enjoy being a rock star, even if it's just for a moment, right? You're enjoying potentially life-changing success.
Most certainly, but I have been around the block a few times, the track a few times. And whenever things have gone this well for me, usually there's a correction around the bend. And I want to gird for it and protect it and also prepare our investors for the possibility and say, just keep some powder dry, because what we're looking at here are long-term, again, exponential growth trajectories that they're not going to be stopped. You can't stop progress. And today, when the government tries to stop progress, well, it usually fails. And so even if we go through a correction, and I expect one, we must almost always expect corrections. I just have to keep my eye on the prize. But I do want to warn investors that, you know, in the investment world, it's not just straight up and to the right. You know, we will have those corrections. So again, we just keep our eye on the prize. We have a 5-year time horizon. We are fully invested at all times, which is what we are supposed to be. But that doesn't mean that investors shouldn't, you know, sometimes take a bit of money off the table and keep some powder dry.
Also, if you want to have more self-confidence and self-belief, I've created a special free program called 254 because the science says that it takes up to 254 days of consecutive action to build a habit. So what I'm going to do is send you an unlisted video to your email every day for 254 days for free to help your confidence and self-belief shift forward. The link to join is in the description below.
When I get to a really good level, then it's like, okay, now we're going to deal with this thing.
Yeah. Loving yourself is the most powerful thing we can do.
Everything we give out can help people really improve the quality of their lives.
Rule number 5, be adventurous.
Cathie, you have a very unique perspective yourself in terms of where this industry is going and positioning yourself for success on that. What advice would you give to young people starting off in investing?
Well, I would say, and consider the source here, but first I would say, try and stay away from anything that is benchmark sensitive. I don't think that's where the real opportunity is. I think that world is being populated by value traps, and I think the returns are going to be disappointing. Mm-hmm. The second thing I would say is try and associate yourself directly with some performance metrics. Mm-hmm. So you can be measured, your performance can be measured, and no one can take it away from you. I think that's very important, if at all possible. And we are moving into a world that is evolving towards exactly that. Okay, let me figure out the return on investment here. We think about that with technologies, but I think that's going to be true when it comes to human capital. So and just be willing to be adventurous. And when others are running away and it's conventional wisdom that something is not going to take off, take a closer look at it.
Yeah.
And see if you can find any merit. I'm not saying there will always be, but if there is merit, as others are dismissing the possibilities, that's where you're going to find great success.
Rule number 6, take risks.
Are you worried that as rates go up, those stocks could come down?
Well, I do believe if rates were to take a sharp turn up, that we would see a valuation reset, and our portfolios would be prime candidates for that valuation reset. Of course, I agree with you, Scott. There will be a valuation reset. There will be fear, I'm sure, and we will use it to our benefit, concentrating our portfolio to our highest conviction names. But I think longer term, especially given the powerful growth trajectories that the 5 innovation platforms around which we revolve all of our research, that those trajectories are so powerful that these multiples, these companies are going to grow into their multiples a lot faster than most investors are now expecting. And so that's a source of confidence for us.
Rule number 7, look for the leverage.
In the equities market over the years, I've always learned whenever I think I can do no wrong, watch out. Just watch out. Start taking the risk off, right? Because it's too easy. That's what happened. And there were too many out there who were leveraged to that extent, who had no idea what a bear market would do to them, like kill them. They're dead. Now, I think the good thing that's happened about that is everyone knows leverage is something you really have to watch. And, even in terms of, our future plans, we, in terms of using leverage in the crypto world, I know what to do. I've run hedge funds and so forth, but it's very clear to me that the people who were stuck, I don't think they were the sophisticated hedge funds. They were the individuals who got hooked and then, began to believe they could do nothing wrong, and then now are out of business. I think it's a good thing for the ecosystem that that understanding is look for the leverage. That's where your weak link is, and you can even say that in the various crypto asset ecosystems. They all learned a little bit more. The governance on some of these is excellent, but they all learned a little bit more about how to adjust their governance to look out for that as a pain point, as a potential pain point and risk factor.
Rule number 8, invest aggressively.
Right now, Cathie, your ETFs alone are generating an annualized run rate of $220 million in revenue, and that doesn't include the other assets under management. How profitable is the business?
Well, our business is very profitable now, but believe me, the blood, sweat, and tears that we left in the early days, it's a scalable model. So we had to pay for the infrastructure in the early days, and we were quite the loss-making company. And I felt it acutely since I funded most of it for the first 3 years. But in those early days, we were investing aggressively, which is what we tell our companies to do, because we thought we would be able to scale. And when we were able to scale, we'd have the right talent in place to scale. And so we've done that. And I'm very happy to say that we are able to reward those who are making us happen, the team that's making this happen, and rightfully so. So in a way, the hedge fund model, you have maybe fewer people and less in the way of assets and the same kind of profits. So we've done it a different way, and now we've shown it's possible, and we think it's a really healthy way to go as well.
Rule number 9, diversify skills.
We have a diverse group of people, a very young group of people generally, mostly because they have one foot in the new world. Their education, their education gave them the opportunity to experiment with CRISPR-Cas9. You're not going to find that in the traditional analyst space out there. So we have engineers, computer science, scientists, and mathematicians, so quantitatively oriented as well. And we've broken out their responsibilities not by sector or industry, but by innovation platform and the 14 technologies. So our setup is very different from other research departments. The diversity of the team, I do consider that part of our secret sauce. Just different points of view, all of them very hungry and energetic and enthusiastic and really wanting to be a part of changing the existing world order, particularly financial services. I don't think any one of them dreamed they would enter the financial services industry. In fact, some of them thought that was the dark side of the world. And, and so I basically said to a few of them, look, if you want to help change the world, and financial services, open architecture with research, move into social media and marketing, come join us. Come join us. And if you want to also maintain or remain at the leading edge of your field of expertise, come to ARC, because that's where we want to invest. And that's where you will extend your network, broaden your reach more than you ever dreamed possible. And so each of our analysts is becoming, I think each is becoming a superstar within his or her area of expertise. And that's another thing that you don't see in other financial services. They will let the portfolio manager or director of research go out there and talk on behalf of the firm. Our analysts are out there on Twitter, LinkedIn, Medium, Telegram, any social network that will help them engage with and become a part of the communities they're researching. So this is very interesting to people generally, but especially young people, where social media is part of their lifeblood, unlike many of the rest of us out there.
And rule number 10, the last one before a very special bonus clip, is have fun.
A non-tech question, aliens, what is the probability that they exist versus not exist?
Wow, I've never thought of that. I have to be open to almost anything in terms of what I do.
Okay. How would you work through trying to get to some probability?
I'd get Brett, our director of research, and our analyst together to say, let's think through this. Let's think through this.
Now I've got a special bonus clip that I think you're going to enjoy. But before that, it's time for the question of the day. I want to know, what was your single biggest takeaway from this video and your plan of action for the next week? When you watch a video and you just get motivated, the sign says you have a 35% chance of actually following through. That's not good enough, Believe Nation. We got to take action. But when you get motivated and then you create a specific plan of action for when and how you're going to do it, your number jumps from 35% to 91% chance of following through. And when you commit to somebody else, like posting down here in the comments below, that number jumps to 95%. I want to know your single biggest takeaway from this video and your plan of action for the next week. Put it down in the comments below so you can follow through and I can celebrate you.
What I think people are also missing, talk about inefficiencies. The opportunities that are being created today are trillion-dollar opportunities. I often say, I think that Amazon is a trillion-dollar stock. It's $240 billion right now. Jeff Bezos has said that Amazon Web Services will be bigger than the retail services at some point in the future. So Right now, it's at a $7.5 billion run rate, Amazon Web Services. The retail is nearly $100 billion. That's a long way to go. What he doesn't tell you is this is going to be 4 to 5 times as profitable. So we're talking about a $240 billion cap company. I really believe Amazon owns infrastructure as a service. Others are trying to compete. Open source is trying to compete with OpenStack. There are probably going to be 2 players, but Amazon owns that space. This is a $1 trillion idea. I think people are missing that. And what they will, and you can talk about 100 PE. This is probably 200 PE. They've made very little money over the years because they've reinvested against these fantastic opportunities. And those companies who have not invested are not going to be the winners. The companies that have been invested, that have these enormous multiples seemingly right now, are going to be the winners.
If you want 10 more amazing rules from Elon Musk, check out the video right there next to me. I think you'll enjoy it. Continue to believe, and I'll see you there.
And listen very carefully to negative feedback.
If you have a choice of a lower valuation with someone you really like, or a higher valuation with someone you have a question mark about,